Based on the historical data and forecast, Bitcoin shows a clear uptrend. The price has consistently bounced off the support level of $66,000 and has been testing the resistance around $89,100. The RSI readings, while fluctuating, generally indicate that the asset is not severely overbought or oversold. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering the forecast prices, which predict a continued upward trajectory, I propose a strategy focused on capitalizing on pullbacks to the lower Bollinger Band and aiming for the resistance level. Specifically, I recommend initiating a long position when the price touches the lower Bollinger Band. For example, on April 14, 2026, the forecast price is $73,800, and the lower Bollinger Band is around $64,100. Enter a long position at $64,100, set a stop loss slightly below the support level at $63,500 to mitigate potential losses. The initial target price should be the resistance level of $89,100. If the price reaches $74,500, consider taking partial profits and adjusting the stop loss to protect the gains. This strategy combines technical indicators with support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits a clear upward trend. The price has consistently tested and rebounded from the support level of $2,090, while the forecast suggests a continuation of this bullish momentum, potentially reaching $2,410. The RSI values fluctuate between 47.3 and 63.8, indicating periods of both oversold and overbought conditions. Considering the RSI, when it dips below 20, we will enter a long position. When it reaches 80, we will exit the long position. The Bollinger Bands show that the price is currently trending above the moving average, suggesting a bullish sentiment. We will enter a long position when the price touches the lower band of the Bollinger Bands. Therefore, my recommended investment strategy is a combined approach leveraging RSI and Bollinger Bands. We will enter a long position at $2,320, placing a stop loss at $2,280 to mitigate potential downside risk. The initial target price will be $2,350. If the price hits $2,350, we will move our stop loss to the entry price of $2,320 to lock in profits. We will exit the position when the RSI reaches 80, setting a final target price of $2,410. This strategy aims to capitalize on the ongoing upward trend while incorporating risk management techniques to protect capital. Based on the historical data and forecast, XRP shows a slight upward trend with price fluctuations. The RSI values fluctuate between 38.6 and 51.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening and contracting, suggesting increasing and decreasing volatility. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Bands for high returns. We will implement a strategy that leverages the RSI's oversold signal and the Bollinger Band's potential breakout. The entry price will be $1.35 when the RSI falls below 40 and the price touches the lower Bollinger Band. The stop loss will be set at $1.33, just below the support level, to limit potential losses. The initial target price will be $1.37, aligning with the forecast price and the middle Bollinger Band. If the price reaches $1.37, we will adjust the stop loss to $1.35 and extend the target price to $1.39, capitalizing on the upward momentum. This strategy aims to capture gains during periods of increased volatility while mitigating risk with well-defined stop loss levels. Based on the historical data and forecast, BNB exhibits a slightly upward trend with periods of consolidation. The RSI consistently fluctuates between 33 and 50, indicating neither strong overbought nor oversold conditions recently. The Bollinger Bands show that the price has been trending within the bands, suggesting moderate volatility. Considering the support price of $606 and the resistance price of $626, and the forecast price starting at $614, I recommend a moderately bullish strategy. I propose a strategy that combines RSI and Bollinger Bands. We will enter a long position when the price touches the lower Bollinger Band and the RSI is below 35. The entry price will be $579. A stop-loss order should be placed just below the support level at $598 to protect against a potential downturn. The initial target price will be set at the resistance level of $626, offering a reasonable profit margin. If the price reaches $626, we can consider moving the stop-loss to break even to secure profits and potentially ride further upward momentum. This strategy aims to capitalize on the current upward trend while mitigating risk with well-defined stop-loss levels. Based on the historical data and forecast, Solana shows a generally upward trend with periods of consolidation. The RSI fluctuates between 36.7 and 53.5, indicating both oversold and overbought conditions. The Bollinger Bands have been contracting recently, suggesting a period of lower volatility, but the forecast prices indicate a continuation of the upward trend. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. The primary strategy will be a trend-following approach, capitalizing on the forecast upward movement. We will initiate a long position when the RSI dips below 40 and the price touches the support level of $81.6. Entry price will be $81.6. A stop-loss order will be placed just below the support level at $80.6 to mitigate potential losses. The initial target price will be set at $86.6, aligning with the recent high. If the price reaches $86.6, we will move the stop-loss to the entry price of $81.6 and set a new target price at $88, the resistance level. This strategy combines the momentum from the RSI and the volatility indicators from the Bollinger Bands for a high-return investment. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently remains above 50, indicating a bullish momentum. The forecast predicts a continued increase in price, reaching $0.328 within the next week. Considering the support price of $0.319 and resistance price of $0.322, and the Bollinger Band showing a narrowing range, I recommend a long position with an entry price of $0.32. Place a stop-loss order at $0.317 to protect against a potential pullback. The initial target price should be $0.326, aligning with the forecast and the upper Bollinger Band. To maximize potential returns, we can implement a trailing stop-loss strategy. Once the price reaches the initial target of $0.326, adjust the stop-loss to $0.32. If the price continues to rise, further adjust the stop-loss to $0.324. If the price reaches $0.328, take partial profits and move the stop-loss to $0.325. This adaptive approach allows us to capture significant gains while minimizing downside risk. The overall strategy combines the bullish trend, RSI signals, Bollinger Bands, and forecast data for a high-probability, high-return investment. Based on the historical data and forecast, Dogecoin shows a slight upward trend with periods of consolidation. The RSI consistently stays within the 40 to 60 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility. Considering the forecast prices are slightly higher than the recent closing prices, and the support price is $0.0901, I recommend a long position with a conservative approach. The entry price should be $0.0944, placing the stop-loss just below the recent support level at $0.0901. The initial target price should be set at the resistance level of $0.103, offering a substantial potential gain. To refine the strategy, I'll incorporate RSI signals. If the RSI falls below 30, consider entering a long position at $0.0901, with a stop-loss at $0.088 and a target price at $0.098. Conversely, if the RSI exceeds 70, consider exiting the position or taking profits. The Bollinger Bands indicate that if the price touches the lower band, it is a good entry point, and if it touches the upper band, it is a good exit point. Combining these indicators, the most efficient portfolio will be a long position with an entry price of $0.0944, a stop loss of $0.0901, and a target price of $0.103, adjusted based on RSI and Bollinger Band signals for optimal risk-reward ratio. Based on the historical data and forecast, Cardano has been fluctuating within a range, with a support level at $0.237 and a resistance level at $0.255. The RSI indicates periods of oversold and overbought conditions, with recent values hovering around the 40 to 50 range. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. The forecast for the next week indicates a downward trend, with prices falling from $0.247 to $0.237. Considering these factors, I propose a contrarian strategy focusing on short-term bounces. My strategy involves entering a long position at $0.237 when the price touches the support level and RSI dips below 30. The stop loss will be set at $0.235 to protect against a further decline. The initial target price will be $0.248, aligning with the recent resistance level. If the price reaches $0.248, we will move the stop loss to break even. Further, if the price continues to rise, the second target price will be $0.255, the resistance level. This strategy leverages the potential for a short-term bounce while mitigating risk through strategic stop loss placement and target price adjustments. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with support at $431 and resistance at $452. The RSI consistently hovers below 50, indicating a bearish sentiment, and has recently dipped below 36, suggesting an oversold condition. The Bollinger Bands are narrowing, which typically precedes a breakout. Given the forecast prices are trending downwards, I recommend a short position. We will enter a short position at $435, placing a stop-loss order at $445, just above the recent resistance. The initial target price will be $420, aiming to capitalize on the anticipated downtrend. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI drops below 20, it signals a potential reversal upwards. If the price touches the bottom of the Bollinger Bands and the RSI is below 30, it indicates a strong potential for a bounce. Therefore, if the price falls to $427 and the RSI is below 30, we will move the stop loss to the entry price of $435 and adjust the target price to $416. This combined strategy aims to maximize profits while minimizing risk by utilizing both trend analysis and technical indicators. Based on the historical data and forecast, Chainlink shows a generally upward trend, with recent fluctuations. The RSI values have been hovering around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast prices suggest a continued upward momentum, with prices expected to remain above the support level of $9.17. Considering these factors, I propose a long position strategy. We will enter a long position at $9.14, placing a stop-loss order at $9.17, just above the support level to mitigate potential losses if the price reverses. The initial target price will be set at $9.33, aligning with the forecast high for April 20, 2026. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been fluctuating within the bands, indicating periods of consolidation. If the price touches the lower Bollinger Band, around $8.29, it suggests a potential oversold condition, which could be an opportune moment to enter a long position. Conversely, if the price reaches the upper Bollinger Band, around $9.42, it signals a potential overbought condition, prompting us to take profits or reduce exposure. For this specific strategy, we will prioritize the forecast data and RSI, adjusting the target price to $9.38 if the RSI approaches 80, indicating a potential overbought condition. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits a clear upward trend. The price has consistently tested and rebounded from the support level of $2,090, while the forecast suggests a continuation of this bullish momentum, potentially reaching $2,410. The RSI values fluctuate between 47.3 and 63.8, indicating periods of both oversold and overbought conditions. Considering the RSI, when it dips below 20, we will enter a long position. When it reaches 80, we will exit the long position. The Bollinger Bands show that the price is currently trending above the moving average, suggesting a bullish sentiment. We will enter a long position when the price touches the lower band of the Bollinger Bands. Therefore, my recommended investment strategy is a combined approach leveraging RSI and Bollinger Bands. We will enter a long position at $2,320, placing a stop loss at $2,280 to mitigate potential downside risk. The initial target price will be $2,350. If the price hits $2,350, we will move our stop loss to the entry price of $2,320 to lock in profits. We will exit the position when the RSI reaches 80, setting a final target price of $2,410. This strategy aims to capitalize on the ongoing upward trend while incorporating risk management techniques to protect capital. Based on the historical data and forecast, Virtual's protocol exhibits a generally upward trend, particularly evident in the recent price surge to $0.701. The RSI consistently fluctuates but has been trending upward, currently at 54.8, indicating strengthening momentum. The Bollinger Bands show a narrowing trend, suggesting a potential breakout. Considering these factors, I recommend a long position with an entry price of $0.684. A stop loss should be placed at $0.67, just below the lower Bollinger Band, to mitigate potential downside risk. The initial target price should be $0.726, the resistance level, aiming for a quick profit. To refine the strategy, I'll incorporate RSI signals. If the price dips and the RSI falls below 30, consider adding to the position at $0.689. For a more aggressive approach, if the RSI reaches 80, consider taking partial profits at $0.701. The final target price should be $0.726, providing a substantial return. This strategy combines trend analysis, momentum indicators, and price action to maximize potential gains while managing risk effectively. Based on the historical data and forecast, Optimism shows a slight upward trend, bouncing between a support of $0.107 and a resistance of $0.118. The RSI fluctuates around 40, occasionally dipping into oversold territory below 30 and briefly reaching overbought levels above 50. The Bollinger Bands have been narrowing recently, indicating decreasing volatility. Considering the forecast for the next week, with prices hovering around $0.113 to $0.115, a moderately bullish strategy is recommended. We'll implement a combined RSI and Bollinger Band strategy with a focus on capitalizing on short-term price movements. The strategy involves entering long positions when the RSI falls below 30, oversold, and the price touches the lower Bollinger Band. For example, if the RSI drops to 25 and the price hits $0.101, enter a long position at $0.101. Set a stop loss at $0.10 to protect against downside risk. A primary target price would be the resistance level of $0.118. A secondary target could be set at the upper Bollinger Band, which is around $0.12. If the RSI rises above 80, overbought, and the price touches the upper Bollinger Band, consider taking profits or tightening stop-loss levels to protect gains. For instance, if the RSI reaches 82 and the price hits $0.12, consider closing the position or moving the stop-loss to $0.115. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, PancakeSwap shows an overall upward trend, consistently testing and bouncing off the support level of $1.4. The RSI fluctuates, but recently climbed above 60, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I propose a strategy focused on capitalizing on upward momentum while managing risk. I recommend entering a long position at $1.55, coinciding with the first forecast price and a recent upward push. A stop loss should be set at $1.46, just below the recent low and below the support level, to protect against a potential reversal. The target price for this trade is $1.62, aligning with the final forecast price and representing a reasonable profit margin given the recent price action. This strategy combines the momentum indicated by the RSI, the volatility suggested by the Bollinger Bands, and the support/resistance levels to create a high-probability trade. The RSI is trending towards overbought territory, so a quick exit at $1.62 is advisable. This portfolio is designed for a short-term gain, aiming to capture the anticipated upward movement in PancakeSwap over the next week. Based on the historical data and forecast, Bonk has been fluctuating within a narrow range, bouncing between support at $0.00000580 and resistance at $0.00000640. The RSI indicator shows a mixed signal, generally staying above the oversold level of 20 and below the overbought level of 80, suggesting neither extreme buying nor selling pressure. The Bollinger Bands have been relatively tight, indicating low volatility. The forecast for the next week predicts a stable price around $60.06, with slight dips to $0.00000590, suggesting a continuation of the current sideways trend. Therefore, I recommend a range-bound strategy with a slight bullish bias, capitalizing on the expected stability. My strategy involves entering a long position at $0.00000585, coinciding with the support level and recent price dips. The stop loss should be set at $0.00000575, just below the lower Bollinger Band to protect against unexpected downside movements. The initial target price is $0.00000605, aligning with the mid-range of the Bollinger Bands and a reasonable profit target within the current trading range. If the price reaches the target, consider moving the stop loss to break even at $0.00000585 and setting a secondary target at $0.00000620, near the resistance level. This approach combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Pudgy Penguins shows a slight upward trend. The price has been fluctuating between a support level of $0.00625 and a resistance level of $0.00732. The RSI indicates that the asset is currently not oversold or overbought, hovering around the 40 to 50 range. The Bollinger Bands show that the price is currently near the middle band, suggesting moderate volatility. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 40, indicating a potential oversold condition. Specifically, when the RSI falls below 40 and the price is near the bottom of the Bollinger Bands, we will enter a long position at $0.00683. The stop loss will be set just below the support level at $0.00625 to protect against unexpected downturns. The target price will be set at the resistance level of $0.00732, aiming to capture a significant portion of the potential upside. To optimize the strategy, we will incorporate a dynamic adjustment based on the Bollinger Bands. If the price breaks above the upper Bollinger Band, we will consider tightening the stop loss to lock in profits. Conversely, if the price approaches the lower Bollinger Band again, we may consider adding to the position. Therefore, if the price reaches $0.00732, we will move the stop loss to $0.00683. If the RSI rises above 60, indicating an overbought condition, we will consider taking partial profits or exiting the entire position. This combined RSI and Bollinger Bands approach aims to balance risk and reward, maximizing potential returns while minimizing downside exposure. The final portfolio will be a long position with an entry price of $0.00683, a stop loss price of $0.00625, and a target price of $0.00732. Based on the historical data and forecast, Ethena shows a fluctuating trend with recent upward momentum. The price has been trading within a defined range between 0.0762 and 0.119. The RSI indicates that the asset is currently approaching overbought territory, with a reading of 56.9 on April 13, 2026. Considering the forecast prices, we anticipate continued upward movement in the short term. Therefore, I propose a long position strategy with an entry price of $0.0951, a stop-loss price of $0.0937, near the support level, and a target price of $0.101, which is the center of the Bollinger Bands and a reasonable profit target given the current trend. To refine the strategy, we can incorporate the Bollinger Bands. If the price breaks above the upper band, $0.104 on April 13, 2026, it signals a strong bullish momentum, and we could consider adjusting the target price to $0.103. Conversely, if the price falls below the lower band, $0.0762 on March 31, 2026, it indicates a potential trend reversal, and we should exit the position immediately. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on the upward trend while mitigating risk with clearly defined stop-loss and target levels. Based on the historical data and forecast, Lido DAO shows a mixed trend with periods of both upward and downward movement. The RSI fluctuates around the 50 level, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been widening slightly, suggesting increased volatility. The forecast prices suggest a potential upward trend, with prices hovering around $0.345 to $0.359. Considering the support price of $0.336 and the resistance price of $0.649, a cautious but potentially rewarding strategy is to initiate a long position when the price touches the support level. Therefore, I recommend a long position with an entry price of $0.336. To manage risk, place a stop-loss order at $0.314, which is just below the recent low. For the target price, aiming for a conservative 10% gain, set the target at $0.37. This strategy combines support level entry, a recent low-based stop-loss, and a realistic target price. This approach balances the potential for gains with a defined risk management framework, aligning with a high returns investment strategy while acknowledging market volatility. Based on the historical data and forecast, Plasma shows an overall upward trend, consistently testing and bouncing off the support price of $0.13. The RSI values have generally been fluctuating between 45 and 66, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.135, placing a stop-loss order at $0.128 to limit potential losses. The initial target price will be $0.148, aligning with the forecast high and providing a reasonable profit margin. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop-loss at the lower Bollinger Band and a target price at the upper Bollinger Band. Conversely, if the RSI rises above 80, suggesting an overbought condition, we will consider exiting the long position. This combined approach, leveraging both trend analysis and technical indicators, should optimize returns while managing risk effectively. The portfolio will be 60% long position, 30% RSI strategy, and 10% Bollinger Band strategy. Based on the historical data and forecast, Aave has shown considerable volatility. The RSI consistently dips below 30, indicating oversold conditions, while the Bollinger Bands frequently widen, suggesting potential for price swings. The recent price surge to $103 on April 13, followed by a forecast range between $96 and $99.8, suggests a potential pullback followed by a rebound. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands to capitalize on these movements. We will implement a buy strategy when the RSI is below 20 and the price touches the lower band of Bollinger Bands. Specifically, I suggest entering a long position at $96 when the RSI is below 20 and the price touches the lower Bollinger Band. Set a stop-loss order at $84.6, slightly below the lower Bollinger Band to protect against unexpected drops. The initial target price should be $99.8, aligning with the upper forecast range and the upper Bollinger Band. If the price reaches $99.8, consider moving the stop-loss to the entry price of $96 to secure profits and manage risk. This approach combines the momentum signals from the RSI with the volatility indicators from the Bollinger Bands, aiming for high returns while mitigating potential losses.